Hey, everyone. Niko Mercuris here, and this is Money Talks with Niko Mercuris, and I have a special guest today. His name is Federico. He is the CEO of Phemex, one of the largest trading platforms on planet Earth in the decentralized space. And we're going to discuss about all kinds of things, people's biggest mistakes when it comes to trading, the trading strategies that we use. As the founder of Crypto Renegades, we have a big coaching program where we teach people how to trade and how to understand the markets. So I wanted to bring Federico on because this is the platform of choice for our group. And we wanted to get his perspective on things since he took over Phemex. Welcome, Federico. How are you today?
I'm good. Thank you for having me. We've seen your community grow a lot in the past few months. It's been great to see so many people interested in trading and learning how to trade. So yeah, it's a great opportunity for me to be here, get to know your community better, and get some feedback from you on the platform as well. And I'm looking forward to the discussion.
Awesome. So how long have you been involved in the trading space? You got a PhD in business or something, huh?
No, in international politics actually. So I was kind of doing something entirely different, but I was doing research in cybersecurity, and I stumbled across cryptocurrencies, and to me it was interesting from like the perspective of nation states and how mining worked, like where miners were located. For example, like for a 51% attack, these kind of things. It was very interesting to me as a topic. And while researching this topic, I got to know some people that were involved in the space already, like building exchanges and trading platforms. And that's where like I've met the people that then we started the exchange with in 2018. They had previously experience with another exchange, and they had decided to separate and build their own from zero. And as you can imagine, in 2019, the exchanges were pretty simple. So it wasn't that difficult to start an exchange from scratch. Like you just needed like 4 or 5 trading pairs were enough to have an exchange up and running. Right now, of course, exchanges are much more complex, but at the time you didn't need even that much venture capital or funding to get started.
Yeah, that's amazing. From what I understand, Jack Tao is a former Morgan Stanley executive there. Is he still involved with Phemex?
No, he left around a couple of years ago. So I was the following
That's when you.
after him. Yeah, like if he was like very involved with the technical aspects, so he helped build the trading engine that it was up to standard to what he was used to at the Morgan Stanley. So like we always were focused on the technology very closely. But as you know, this market can be very stressful. So sometimes people like after a few years, and if you have built a successful product, you might want to like, okay, I'm just going to chill for a bit and do something a bit more relaxing in venture capital. That's what he did. Some other people just retire. So leaving the stressful jobs to younger people, I suppose.
Yeah, he's been around for a while. So in Crypto Renegades, what we do is obviously we help people to learn how to trade. And I know a lot of the problems that people have is they sometimes stumble across these platforms. They throw some money in there, they open up an account, they put some money in there, and they don't understand leverage. They don't understand how to use it. They don't understand proper risk management. They're just gambling. They just throw some money in there and they try to make as much money as possible, and they end up maybe losing or getting hurt. And that's why we love to teach people and show them the proper way to do it, use proper risk management, and how to grow their accounts. I know that that's a positive thing also for the platforms, because you guys charge very small fees for transactions, and in comparison to even centralized platforms like E-Trade or Fidelity in the centralized space in the stock market. And a lot of people worry about the fees, and I'm like, this is a small price to pay when you understand leverage, when you understand how to make profitable trades. I think that new people, when they come in, they don't really understand how everything works. And so, yeah, I think it's great because it helps the platform when people come on and they know what they're doing, because they're likely to stay longer, trade longer, make more money for themselves. And obviously the platforms make money on the fees. So the longer someone trades, the better for you guys. I think a big misconception, and you can correct me if I'm wrong, is that people think that when they lose on a trade that the platform's making the money, that you guys keep the money. That's not the way it works.
Yeah, that's probably the biggest misconception we hear when talking to traders. So there's 2 types of exchanges. Some are like A-books, which means that the platform is kind of agnostic towards its traders. So the participants trades with market makers, which provide liquidity to the platform, and which means that people trading, losing, sometimes they lose against these market makers, sometimes one market maker, sometimes another. And if you make money, you actually make money from these market makers or other participants. And the platform is a bit like just making the orders match in the order book, right? Making in the order book. We don't actually make a profit from people either losing, or we don't lose when people win their trades. Some other exchanges are more on the B-book side, which means that actually you trade against the exchange. But I think this kind of creates a conflict of interest between the exchange and the users, because it means that the users are actually keeping the exchange alive by losing their own money, right? which means that sometimes these exchanges can offer very, very low fees, for example, because their business model is completely different. While on exchange like ours, we have to actually provide some fees to market makers in order for them to provide liquidity, right? Which means that if the fees are paid by the users, they're not all going to us. Some of them are also going to the market makers to make sure that all the orders are getting filled in a reasonable time frame. So yeah, we don't trade against the customers. I think it's kind of unethical to do so. And some exchanges that push very, very low fees, almost zero fees, I think a lot of them survive either by diluting their tokens, just selling tokens, and you kind of like get liquidity like that, or they trade against the customers, which I think it's a bit unfair for the customer, since you have all the information about their liquidations and their margin and their stop prices, all this kind of thing. So it would be a bit like cheating if trading was like a video game, let's say.
Yes, absolutely. I agree. And that's why we love Phemex and why we recommend our coaching students to use it. We don't make them, they can use any platform they want, but we've already time tested several of the majors. There's only like 5 or 6 in the top, in the top 10 really that we would even ever use if we had to. But we chose Phemex. It's very intuitive. It reminds me of my iPhone. It's like whenever you go from an old phone to a new iPhone, you're like, oh my gosh, this is so much easier. I don't know how I could survive on the other one anymore. So that's the way we feel about Phemex. What is your take on trading like majors versus low cap? A lot of people, especially when they come into my coaching group, they notice that I prefer to trade Bitcoin futures contracts on a Bitcoin margin. And my philosophy is that my goal is to accumulate more Bitcoin over time. I'm not trading for income, so to speak, to pay my bills. Some people, you can do that, obviously, and you can sell your Bitcoin wherever you want, or you can convert it to USDT, or you can trade on USDT and just try to make money, so to speak. But if you have an income from another source, like a job or a business, and you want to grow your crypto holdings, you want to grow your Bitcoin or whatever, that's what I do and I teach people. But once they learn how to execute a trade, open positions and get out with profit, they can do whatever they want. They can trade for income. They can grow their accounts. But I think some confusion comes from the majors versus the low caps. Do you have insight on what the difference is there?
Yeah, I think something that has a shift has occurred in the past few years compared to when we launched the exchange. So when we launched the BTC Inver Perpetual Future was the dominant futures contract in crypto. So it was the most traded asset on BitMEX at the time, then Binance, Bybit, us eventually. And everyone was trading this asset because the idea, as you said, was like stacking Bitcoin, right? But now we've seen like there has been a shift in the market where people prefer to trade denomination in USDT, right? So because they think, okay, I'm actually stacking dollars, even if I don't care that much about Bitcoin, like ideologically or whatever, I just want to stack USD. So I think those people, they just want to like make it maybe their job at some point, like trading as a second source of income. So I think in that regard, probably you remember when a few years ago in 2019, Bitcoin was relatively much more volatile. So maybe now the swings in dollars are much higher, but percentage-wise, like now Bitcoin, the volatility has compressed a lot, right? But some people are still looking for those kind of swings, like 10%, 15%, 20% swings, which now are very rare in Bitcoin, right? So I think those people will move a little bit further down the market cap list of cryptocurrencies now that Bitcoin is like one of the top 5 assets on the planet. Of course, it cannot swing 20% in a day, right? So those people will look at smaller altcoins for the same kind of volatility. So I think for newer users, there are some advantages in trading these smaller caps, because you get that volatility, those inefficiencies that kind of like help you like stacking from a small stack to like a huge stack. At the same time, you need to understand the risk. And if it's someone like maybe you have a lot of experience now with the Bitcoin price action, right? So for you, like moving to something that is far more volatile and I would say maybe more affected by the market news, or like if there's a hack or something, like there is a lot more risks you need to consider, which probably is not worth the trade-off for you, right? But for someone that has maybe more time to dedicate to the market and to study and to learn, they're starting from scratch. I think smaller market caps altcoins, they offer more asymmetric opportunities if you are willing to play that risk.
Yeah, and that's what we also tell our group. In our mastermind, in our Discord group, we have a couple different signal channels that we give. And me specifically, it's more Bitcoin and XRP, some of the higher, larger caps, so to speak, the majors. And then we do have Chad, my partner, who gives signals on what we call the unicorn coins, which are the mid caps, the micro caps, and some of the, as they say, shit coins, the meme coins and things like that. And it's amazing because we've seen some of those do, hundreds of percentage gain moves in a very short period of time compared to Bitcoin. Like you said, Bitcoin used to do 1 to 5% a day, almost every single day, like it was nothing. And now we have a lot of sideways action, but every time there's a nice breakout, we do still get sometimes a nice 5% move to the upside or downside. And I just think learning how to go long or short A lot of people, when they first come in the market, they think, oh, is the bull market over? Is it too late? And we're like, no, it's never too late, because it doesn't matter what direction it's going. When you understand the trade, you can make money in either direction, going long or short, or even at the same time. I know that I wanted to ask you about yield farming or best yield products in crypto. What is your thought on that? Do you have a specific or a preferred higher yield crypto that you look at?
Yeah. So I think right now the DeFi markets has matured a lot in the sense that it relies less on tokens dilution in order to maintain an attractive offering. So I think products like AAV or Morpho on Base, I think they offer pretty competitive yield. Also, we've seen Ethena, which is kind of like a play on funding. So I think these are products that any trader should kind of understand in order to diversify their trading strategies. And what we would like to do at Phemex in the next few months is release some kind of yield products for users that want, for example, to grow their Bitcoin kind of more passively. You know what I mean? I think right now, a big misconception is all these new companies popping up and trying to provide some yield on Bitcoin without really explaining to you where this yield come from, right? Like you've seen MicroStrategies, you see 21 Capital, all these kind of companies, and I don't think they're being very transparent regarding where the yield actually come from, right? But as a platform like crypto native platforms, we actually have part of our revenue is in Bitcoin, right? So if we can share part of this revenue to users, then it will be very easy for us to actually provide the yield-bearing products that are not reliant on some kind of hidden trading strategies that are not disclosed to the users, but are kind of safely shared with the users without any really risks. Because I think a lot of these, even Ethena offers very attractive yield on stablecoins, right? But it is a play on funding, right? So there is a risk involved with it, and people don't quite understand it often. So I think that's something that we will look into, because as you know, once the bull market maybe slows down a little bit, people will look for more passive sources of income.
Yeah, I agree. As far as lending opportunities, because that's a thing that people hear about, and Coinbase used to do it where they would lend against your holdings, specifically Bitcoin. I think they were doing up to 60% back in 2020, 2021. What are your thoughts on that? Is Phemex ever going to offer that type of program as well?
Yeah, we do have a lending program, but we try to be as conservative as possible. I think what happened in 2021 showed that a lot of deals in crypto were kind of handshake deals in terms of what was used as margin or collateral, all these kind of things. So I think even if we don't offer the most attractive lending APYs, I think it's better to offer a safe product rather than something that you have no idea who's borrowing on the other side and are just using it for very risky trading strategies. So I think as an industry, we don't want that kind of house of cards happen again, and the funny part about that is that the decentralized lending protocols such as AAV and so on, they performed well, right? Because they were well collateralized, everything was on chain, everything was transparent. The points of failure were actually those deals that were done by centralized platforms. That's right. As the 3 Arrow Capital, all these kind of people involved. So I think as long as everything is on chain and transparent and you understand the risk, I think that's the best option for borrowing and lending.
Yeah, we actually talk about that a lot even on our webinars in our mastermind. A lot of people are scared about decentralized, and it's only because they just don't understand the difference. I mean, most of the problems that we saw over the last 5 years were all with centralized platforms. I mean, yeah. You got the FTX scandal. You had where millions of dollars were just basically stolen, and that was promoted by governmental agencies and politicians and celebrities and sports stars and everybody.
Yeah.
And then with Coinbase, they were loaning up to 60%, but all it takes is 20% dip in the market, and you get collateralized if you borrow too much against your Bitcoin, right? So you do have to be careful there. A lot of people want to borrow the most, but at the same time, is that the smartest thing to do? Like in real estate, you don't want to take all the equity out necessarily. If there's a dip in the market, you're kind of screwed, right? So yeah, I look forward to that, because obviously I think there comes a point, where if you build it up enough, you don't really ever want to sell it, but you do need money. Maybe you need to buy things. You want to buy that dream house or maybe the boat, but you don't want to liquidate the Bitcoin. So you want to borrow against it, hopefully at a lower APY than you're earning from the increased value of the asset that you're borrowing against.
Yeah.
If Bitcoin continues to go up 20, 30, 40, 50% a year, and you're paying 8, 9, 10% for the loan, then that's a pretty good arbitrage, right? If you can get away with it. Hope you're enjoying my interview with Federico, the CEO of Phemex, the best decentralized crypto trading platform out there. Now, we're going to get back to the interview, but by the way, I just wanted to remind you that if you want to learn my complete system for becoming a consistently profitable crypto futures trader in just 4 hours per week, click the first link in the description to join my free training. Also, right below that link is our Crypto Renegades community preferred exchange, which of course is Phemex. Exclusively with that link, you're going to get VIP white glove treatment, where beginners can claim up to $5,000 in mock funds for risk-free practice along with up to 30,000 USDT deposit and trade bonus. All right. Now, check those links out and let's get back to the interview. So, are there overlooked tools available on Phemex that people aren't aware of? Because there's a lot going on Phemex. We teach people how to use Phemex and stuff, but I am sure, just like my phone, that there's a lot of stuff I could do on this that I don't even know about. And, we're going long, we're going short. We understand how to take trades and get in and get out and all that stuff, but there's probably a lot of things available on Phemex even that I don't even know about. Is there anything new that you think people should be aware of?
I think one of the things that I notice the most when I look at our platform compared to other platforms is that our platform tend to have significant difference in funding compared to like other bigger exchanges such as Bybit, Binance. And that comes from the fact that we have, in percentage-wise, less institutional players on the platform. So that we have more retail as compared to institutions, which means that our markets are slightly less inefficient. So if you learn how to play arbitrage between funding rates, and if you use more than one exchange, for example, such as maybe you have an account on Binance and one on Phemex, one on Bybit and one on Phemex, then actually you can earn like some risk-free trades by arbitraging the funding rates between these two platforms. So all these kind of like small differences and inefficiencies in the market, which in crypto are pretty common because our markets are fairly novel. So they're not as established as traditional financial markets. They offer opportunities for risk-free trades, which I think users should learn to take advantage of. For example, also our USDT, USDC market on spot sometimes is a little bit inefficient compared to other markets on other platforms. So, and that's a very easy arbitrage to exploit, right? Like you buy on one exchange, you sell on the others, and that's it, right? And right now, like these markets are also very liquid, so you can do in decent size this kind of like arbitrages. So I think understanding like what are the difference between like a big platform like Binance and like a smaller platform like ours, I think can help open some opportunities. And then understanding also different types of orders, I think it's important. Like I know, Niko, probably you know that many people don't even know the difference between like a maker order and a taker order, right? Like it's something that a lot of users actually don't like pay attention to, but that can save you a lot in fees if you trade frequently, right?
That's correct. A lot of people don't even know the difference between a centralized exchange and a decentralized exchange.
Yeah, that's true.
I'd like to hear your take on that because, we try to explain it and we try to put it in layman's terms for people, but how would you describe the difference?
So centralized exchanges, they abstract away the transaction when it comes to crypto or fiat to crypto. So we just hold all your assets in our ledgers and then we abstract your trades. And then when you need to deposit or withdraw, then that's actually when you interact with real crypto. So we just hold kind of like the tally of what's happening in our platform, but that doesn't happen on chain. Whatever happens on chain is just the amount of assets on the platform, right? Which can be checked on our proof of reserves page. Like all our assets are openly on chain. Like you can check where all the assets are stored, which is very important because not all exchanges publish that proof of reserves, but that's a different topic. On-chain platforms and the centralized exchanges, they actually perform every trade, every like order on chain, which means that all these orders are recorded on a blockchain, such as Ethereum or a layer 2 or Hyperliquid or whatever it is, or Solana, which means that there is a trade-off in terms of performance. So there will be, some things will be slower and everything will be public to the blockchain. I'm sure you followed the story of James Wynn, the big trader of Hyperliquid, right? Yeah, the guy that had like a $1 billion long on Bitcoin or something. So this guy, like his trade, his stop loss, his liquidation point, all of it was on chain, which for a big trader is very risky because once you have that big of a position, someone will try to hunt it down. And we have seen how the market was literally like ranging for weeks until he was completely liquidated. And that's when we actually started pumping to 120K or whatever. So you need to understand that our market is still kind of relatively easier to manipulate as opposed to the stock market. So you want some information to not be publicly available about your trading. And I think in that, centralized exchanges offer some kind of additional privacy.
Yeah, that's a great explanation. That's one part that I left out in my explanation. I'm going to add that when people ask now because, a lot of people just think, well, isn't it safer? They just think, oh, it's US based or it's regulated and therefore it must be better. And that's the misconception, I think, especially with US based and Canadian based people. They're scared of everything that's outside of the country and they don't realize that the majority of the money is outside of the country, not inside the country. They're in a bubble.
Yeah, and also I think the FTX collapse showed that regulators don't have a very clear understanding of how crypto exchanges work. Like the amount of embezzling and kind of like commingling of funds that happened with FTX should have been found out a long time before the exchange actually collapsed. Like there is no way that the market makers of like Alameda could access all those funds without these being noticed by anyone, if actually they were like very close to regulators, getting licenses here and there. Like, so I think regulators don't have a clear understanding of how exchanges work, and they are kind of like trying to slow down the progress as much as possible so that some kind of legislations catch up. But I think crypto moves too fast for that.
Yeah. It's amazing how many people don't understand anything that they're trying to actually regulate. We see that with the politicians here, and yeah, it's nuts. So, what's your take? I usually give a good explanation for stacking Bitcoin versus stacking fiat currency. Obviously, the U.S. dollar, for instance, the dominant currency in the world, is going down in purchasing power at a rate of probably 8 to 10% per year, in my opinion. And Bitcoin was trending up at a rate of almost 100% a year for almost a decade. And it might be somewhere between 40 and 80%. I don't know right now, but it could eventually go down to 50, 40, 20. It'll probably be 20, 25 when it stables off percent per year, which is still double the S&P 500 in the States. So what's your take on the more Bitcoin you have, the less expensive everything becomes? I don't think people can really grasp how that is and why that is.
Yeah, I mean, that has been historically truth. Like, there is almost no one at a loss on Bitcoin forever, right? Like, so if you look at like the chart, like no one is at a loss ever on Bitcoin at this point, like unless you traded it for the first time in the past 2 weeks. At the same time, you need to understand that like Bitcoin carries some volatility, which is part of why it has become such a popular asset to trade, right? So I think understanding that Bitcoin is a volatile asset and that you might be prone to FOMOing when there is new all-time highs, all these kind of things. I think it's something that all new traders at some point will learn one way or another, right? So I think Bitcoin, like the volatility goes both ways, right? Sometimes you buy high and then the price goes low, but at the same time, you also know at some point you will get a better price for Bitcoin. Like at some point you will get a good entry. That's how Bitcoin works. Like it's intrinsic of how volatile it is. So with Bitcoin, I think you need to be patient and wait when a real kind of like systemic shock in the market happens, and then it's a good opportunity to jump in. For example, when Trump announced all the tariffs, right? Like it seemed like the world was going to end. Bitcoin fell to 75K, and now it's up almost 50%, right? So I mean, it's those are opportunities that retail traders need to take and a little bit fight against their instincts, right? Because it seems like the whole world is collapsing, and you need to like instead like go against the grain and say, okay, now I actually buy. So that's probably the hardest mental step is for traders.
Yeah, it's human nature, and it's very difficult to be counterintuitive and to be contrarian to what the masses are doing. And well, everybody says in their mind, buy the bottoms, or buy the dips, but no one ever does it. It's like they're scared to do it when it actually happens because they don't think that dip is actually the bottom. They think, well, it's just going to keep going. I'm going to wait till it gets to 10K. And in the last bear market, it got to 15.5 and it never went lower. We were given long signals in our group at 17,000. We were calling the bottom then. So it went down to a little bit lower. But even if you would have went long at 17 or 20 or 25, you'd have been very well off right now.
Yeah, it doesn't matter. I mean, nailing the bottom is kind of like an overrated skill, I think. Like finding the exact bottom is not that important of a skill rather than understanding, okay, the range has formed in the bottom. So now at some point we will go up. You don't need to nail the exact dollar because as you said, 15K, 20K, doesn't matter if it goes to 120K, right?
That's right. That's right. And with that being said, there's a lot of people out there that, they ask me when they come in, they're new, they don't really understand anything. They're still stuck on the dollar, meaning, they want to make a profit. Everybody wants to get into trading to make money. And then I ask them, which money? What are you trying to accumulate the most of? US dollar bills or, the whatever currency your country is, or crypto? And they're like, well, I want to get rich or I want to make more money. And I'm like, okay. Well, if you made a trade in Bitcoin, let's just say, and you were on a Bitcoin margin, which means that when you make the trade, you're making Bitcoin, you're not making US dollars. And Bitcoin, let's just say it doubles in value. You just made 100% gain in Bitcoin. Are you going to then sell and close that trade out and convert that back to US dollars and wait for the next trade and be proud of yourself because you made 100% profit in US dollars? Or are you going to keep the asset that has actually been going up in value at a rate of 80 to 100% per year over the last 10 years, instead of trade it back to an asset, the US dollar, which is going down in purchasing power at a rate of 8 to 10% a year? It's amazing to me that people keep trading more valuable things for less valuable things over and over again. But, people are like, well, I need money. I got to pay my bills. I got to do this. And so we understand that. So it's hard to do both. But people ask me all the time, and this is what I wanted to ask you is, when should I get out? When do you think the top is in? And I think people, if we're at the top, shouldn't I sell my XRP and then wait for it to dip and then buy it back at a lower price? These are the kind of questions we get all the time.
Yeah.
What are your thoughts on that? I mean, I know that is a strategy, and I know if you could actually time the market perfectly and sell the top and buy the bottoms, then that obviously would be beneficial. That's a crystal
Yeah.
ball situation.
Yeah. I think the one skill that one needs to develop, and it's difficult to kind of sharpen this skill because it doesn't happen very often. Like the market doesn't give you many tops in a lifetime, right? Like it's happened every like 3-4 years. But when like the good news don't ever stop coming out, like every day there is something good. Like every day someone is buying like billions of Bitcoin, and the price of Bitcoin is not moving that much. Like when you see everyone is being euphoric, and it's like Elon Musk is on SLN talking about Dogecoin, and Dogecoin doesn't go higher, and that's when it's like, okay, like these good news are like coming in like at a very high rate, but the prices are not going up. So I think that's when you need to like figure out, okay, maybe the market is a bit overextended, and I can like manage my risk, like scale out a little bit, save some profits, and then see what happens. All the parts of the moon bag if the markets keep going up. And that's the most difficult part, because as much as it's difficult to nail the bottom, also nailing the top is very difficult, right? Because it seems like the good news just don't stop coming. There's always something like some new companies buying Bitcoin, like Trump is pro Bitcoin. But I think like you have to fight a little bit against your nature in that regard as well, and trying to understand when like you are being a bit too greedy maybe with like your profits, and you say like you're looking at cars online, at houses or whatever, and trying to understand yourself, like, because I think we give ourselves stop signals as well. Like when we are being too greedy, like you need to understand like your mindset in that regard.
That's funny you say that because one of our tutorials and when people first get started with us is about mindset. And a lot of people skip that because we can see who watches what and how long they watch the videos in our training program. And a lot of people skip the most important thing, which is the mindset video, because they think they don't need it. I'm already motivated. I'm already a go-getter. I already know what I want. But they don't realize the fear and greed, the emotion that comes with money, when you're trading, and how it blocks you. And a lot of people have these limiting beliefs they don't even realize that they have. And then when they have some losing trades, they feel like they need to get on a one-on-one call with me or my partner. And once we get on with them, it all comes down to life coaching. It comes down to a mindset situation where they were, oh yeah, I just thought it was going to go up and I added contracts and I increased my leverage. That's greed. I mean, this is a greed kicking in. And so, yeah, we deal with that all day, every day. And if people could just control their emotions, when you see a herd running towards the cliff, do you join them or do you sit back? Warren Buffett said it, when there's blood in the streets, that's when you're greedy. And when everybody's greedy, that's when you should be fearful. It's like,
Yes,
this is true in crypto trading as well.
absolutely. Yeah. Round tripping, like a big trade, is like kind of like a formative experience in crypto. Like it happens to everyone. Like at some point, it must happen to round trip, like 10,000% gain or something. Like it happens to everyone, and then you're like, okay, next time I will be a bit more mindful. And if you have a plan, like, okay, if I'm up like 4x, I sell, then you sold. Like you don't round trip ever if you have a clear plan, right?
Yeah, exactly. Exactly. That's the hardest thing. So I think that the difference between a successful trader, a new trader, and or becoming successful, or a successful trader and a not successful trader, is that everybody I know who's doing quite well trading, they finally got it. They're consistently profitable. They made all the mistakes. They did all the things. They just kept going. They just kept trying. They just kept tweaking. They kept pivoting. They kept reducing the things they were doing wrong until they were just doing the right thing. And it's the stick-to-itiveness, I call it, or the persistence and the determination that made them become a winner. And the people who are failing at it are the ones who just give up and quit, or think this is too hard, or no, this doesn't, oh, I lost 3 in a row or 5 in a row. This isn't right. And instead of trying to figure out what they're doing wrong, they just throw in the towel. Any last words of encouragement for people who are struggling with that? Because trading is math, and people think, oh, math is hard, and this is numbers, and numbers is difficult, but it really isn't once the light bulb goes on and once you really understand it. But people just got to get through that learning curve a little bit.
Yeah, as you mentioned, like trading is more about the mindset and understanding like how most people think. Like once you understand that most people share the same mindset of being like greedy at the top and fearful at the bottom, like that's what you need to play around with more than like math and like percentages. Like that's really all there is to it. Like, but you need to understand the tools as well, right? So understanding like what does it mean to go long, short, like if I use X leverage, like how much I will pay more in fees, how much my risk will increase, all these sort of things are very important, like I would say basics to understand. So it's good that there is a lot of resources now to explain like these aspects of trading, because I think for new people joining crypto, like there is a lot to learn really. But I also think it's a good thing because like people don't understand financial derivatives. They don't teach those in school, right? If you go, like, you don't study finance, right? But if you join crypto, you will have to learn financial derivatives like your first day, right? So I think this is a great industry to give you like a financial education in terms of all these different aspects like inflation and market caps, fully diluted valuation, all these kind of things, which are essential to so many things in our lives, and most people don't realize until like it affects your like pensions and your savings, all these kind of things. So I would say crypto is a great industry to learn financing because everything is very transparent and everything is right under your like fingertips. Like there is so many resources available. So I recommend anyone to actually study this industry. Like that's my, I would say, suggestion. Like just take it as something, an opportunity to learn about how so many different things in our world works.
Yeah, absolutely. And we say that too in our webinars, just get educated. A lot of older people, 50 and up are starting to come in and learn about it as well. And some of them are scared. They're like, oh, I'm not really good on the computer. I'm like, well, you need to get good, instead of keep making excuse that you're not good on the computer. You just learn.
No way around it. Yeah. And it's never been easier, right? Like, as you said, like the apps for exchanges, platforms are super simple now. Like it's very straightforward.
Yeah, absolutely. Well, it's been a pleasure speaking to you. Obviously, we teach people how to trade and how to understand the markets in Crypto Renegades. We use Phemex, which is our preferred platform of choice. And we're going to have some links under this video here for people if they want to open up an account at Phemex and take advantage of that. But not only, if you want to learn more about Crypto Renegades, either comment below, send me a DM. There will be links below where you can learn more about us as well. But not only getting training by us or someone like us, just learn, but make sure they're legitimate. There's a lot of scammers out there. You got to be careful in this space because there's so much money involved in it. It's such a lucrative opportunity. That's when the scammers come out and try to take advantage of unsuspecting people who are vulnerable and maybe ignorant to how things work. So make sure you get educated. But if you open up an account in Phemex, they have a ton of tutorials and training inside the Phemex platform as well for new people. And so we just love it. And Federico, we appreciate your time here. I know that you're a busy guy. You're running Phemex over there. And I would love to come out and visit you, one of your corporate offices here soon. But any last words for the people?
Like, we really appreciate what you do for teaching people how to trade. And I think the quality of the content and the educational content is extremely high. So yeah, thank you for having me again. And thanks for the community using Phemex.
Awesome. All right, buddy. Thank you. And I'll talk to you soon.